everyone, I'm attorney Aiden Durham with 180 Law Co. in Colorado. Welcome back to All Up in Your Business, where today I'm going to give you a few tips when it comes to paying yourself from your business or your LLC. Before we get into all that, please do subscribe if you haven't already done so. Click that little bell so you get notified anytime I post a new video, and check the description for links to additional information and resources. And while I am a lawyer, I am not your lawyer. The stuff I talk about in this video should not be taken as a substitute for legal advice, because it's not. If you need help with any legal matter, you should consult with a lawyer who's licensed in your state. So for most of us, maybe not all of us, but I believe most of us, we probably get into business and we form our business, form our LLC, because we want to make money. Sure, we might have some other altruistic purposes. We want to help people. We want to do good in the world. That's great. That's great, but we still need to support ourselves and earn money for ourselves. And when it comes to paying yourself from your LLC or from your business, there are a few things that you can do that can kind of really screw it up. So my first tip for paying yourself from your business is keep in mind how your business is taxed. If you're formed as a single member LLC and you're not taxed as an S corporation, or even a multi-member LLC not taxed as an S corporation, it's basically as if the LLC doesn't exist. If I'm a single member LLC, I'm taxed as a sole proprietorship. Under the IRS, an LLC isn't an entity type that the IRS really recognizes. LLCs as a single member are taxed as sole proprietorships, and as multi-member LLCs, they're taxed as partnerships. And whether sole proprietor or partner, it's taxed at the individual level. There's no corporate tax, there's no business tax for an LLC. And so what that means is that you're going to pay taxes on your business's income regardless of how much or how little you've paid yourself. Let's say my business as a single member LLC has a taxable income of $100,000. And I paid myself maybe $50,000. It doesn't matter that I've only paid myself $50,000. I have to pay taxes on all $100,000 of that income. Hi, pal. Hi. I don't think anyone can see you. Bye, Rocky. So keep that in mind when you're paying yourself. Don't get bogged up. Don't get stuck in the weeds of, oh, if I pay myself too much, am I going to have to pay more taxes? No, you're not going to. The taxes are going to be the same regardless of how much or how little you've paid yourself. That's not the case necessarily if your business is taxed as an S corporation. Then it does kind of make a difference. But if you're not taxed as an S corp, it doesn't matter. Hi, little tap dancer. My next tip is to pay yourself either by writing a check or doing an account transfer. You can technically pay yourself however you want to. There's no rule about how the method that you're supposed to use to pay yourself from your business. You can write yourself a check, you can do an account transfer, you can withdraw cash and deposit that. If there are, I guess, the Bitcoin, you can pay yourself however you'd like, whatever method you want to. But we are going to want to be able to look back in our records and see what was a member distribution versus maybe an expense that is a deductible expense. Because member distributions, that's the word, or member draws, that's the term for when we're paying ourselves, those aren't deductible expenses. It's not like a payroll expense, because again, tax-wise, they don't care. They don't care that you're paying yourself that. So for the purposes of bookkeeping and filing taxes and just knowing how much you've paid yourself, I find it's easiest to do that if you're writing yourself a check, so then you can put a memo on it, so member distribution. Or if you do an account transfer, like an ACH transfer, usually you can put a little memo on that says member distribution. So then when you go to file your taxes or when you're looking through your records, you'll know, oh yeah, this was when I distributed some of that profit to myself. Tip number 3 is don't forget to save for taxes. We're not employees of our business unless we're taxed as an S corp, then we kind of are. But if we're not taxed as an S corp, we're not employees, we're not getting a paycheck, we're not getting a W-2, we're not having taxes withheld from our paycheck like we are if we're an employee. So we have to remember that we're gonna have to pay these taxes at some point later on, and so we should set some aside and save for that purpose. Exactly how much should you save for taxes? It depends. It depends. There's no strict number to stick to. Generally speaking, between 15 to maybe 30% of your business's income, that is a good amount to set aside for taxes. That doesn't mean all of it's going to be paid out in taxes, but at least, even if you overestimate, at least you'll have more than enough to pay for the taxes that you have to pay. So again, if your business has a taxable income of $100,000, I wouldn't suggest paying yourself all $100,000 because, some of that's going to have to go to taxes. And of course, some of it's going to be, I assume need to be kept in the business to continue operating the business. So when you are paying yourself, make sure you're keeping in mind some of this should be set aside for taxes. And finally, my last tip, and really the most important tip, I think, is to have a separate bank account that you're paying yourself from. More specifically, make sure you have a dedicated business bank account and that you are paying yourself from a business account and putting that money into your personal account. If you have money from your business deposited directly into your personal account as an LLC, and especially as a single member LLC, that is a big time no-no. You really put yourself at risk of piercing the corporate veil in that instance. So you really must have a separate dedicated business account or multiple business accounts. And then you pay yourself from your business, write yourself a check from your business account, deposit it into your personal account. Do a transfer from your business account into your personal account. Do not put all your business money into your personal account and that's it. That's bad. And you don't have to stop at just one account. You can have multiple accounts. I personally, what I do, I have a handful, but I have an operating account. That's where my income, my client, when people pay me, that money goes into my operating account, and that's where I pay for my business expenses, comes out of that operating account. Then I have a separate savings account where I put some money to save for taxes. And then I have another checking account that's my owner's compensation account. And that's where I put some money that is specifically reserved for me to pay myself with. You don't have to do it that way. You can have just one account and remember, maybe I have to save this much for taxes. I can pay myself this much, but make it easy on yourself. Have separate accounts if you'd like, and make it easy on yourself, and make sure you have a bank that is going to make it easy for you to pay yourself. Like if you want to just transfer money when you're paying yourself, but your bank charges you for ACH transfers, that's not going to be ideal. Maybe find a bank that doesn't charge for those types of transfers. And there are a lot of banks out there now that are offering multiple accounts or kind of sub accounts within one main business bank account. So you can have as many different accounts as you want, one for taxes, one for paying yourself, one for saving for fun stuff. You can have as many accounts as you'd like, and you can use them for whatever purpose you want. Check the description because I've got a few banks that I'm familiar with and that I've worked with that I really like for this purpose, that make it super easy to just operate your business generally, but also to pay yourself and help with kind of allocating some of your income for taxes and paying yourself and everything in between. So check the description for more info on that. And there you have it, folks. So overall, the how of paying yourself is you can pay yourself however you'd like for the most part. But in doing so, we want to make sure we're saving for taxes. We want to make sure we're going to be able to remember that we paid ourselves in that method or on that date. And we're going to want to make sure we're not putting our own liability at risk and risking piercing the corporate veil with commingling and mixing our personal and our business assets. If you learned a thing or two, please go ahead and give me a thumbs up. And don't forget to subscribe if you haven't already done so. Click that little bell so you don't miss another episode of All Up in Your Business. And don't forget to check the description for links to additional information and resources. I talked a little bit about S-Corps and how it's a bit different if you're paying yourself from an S-Corp. If you are taxed as an S-Corp or you'd like to be and you're wondering, wait, how do I pay myself in an S-Corp? I've got a video talking all about that, of course. You can check that out right here. I'll meet you over there. Thank you so much for watching. I'm Aiden Durham, and I'll see you next time.